Welcome. As Indian investors, we are always on the lookout for that next big multi-bagger. But in a volatile market, how do we distinguish between a stock that is actually cheap and one that is just a value trap? Today, we are cracking the code on how to use price to book value alongside return on equity. It is not just about the price you pay, it's about the value you're taking home. Let's understand how to build a portfolio that stands the test of time by focusing on solid fundamentals rather than just market noise.
Let's talk about the P/B ratio. This is a classic metric used by seasoned value investors to see if a stock is trading near its book value, essentially what the company is worth on paper if it closed down today. Generally, a P/B below 1.5 is considered quite attractive in our markets. If you find a stock with a P/B less than 1, you are effectively buying the company's assets for less than they are worth. However, don't just look at the number in isolation. We need to check the balance between assets and liabilities to ensure the book is actually healthy. Now, a low P/B ratio alone can be misleading. A stock might be cheap because the business is failing. This is why we use return on equity, or ROE, as our quality filter. ROE tells us how efficiently the management is using shareholders' funds to generate profits. For a solid Indian company, we typically look for a consistent ROE of 15 to 20% over at least 5 years. If a company has a low P/B but a high ROE, it means the market is ignoring a very efficient profit-making machine. That is where the real paisa is made.
So, here is the secret sauce, the sweet spot. You want to screen for stocks where the P/B is less than 1.5, but the ROE is greater than 15%. This combination suggests that the company is highly profitable and efficient, yet the market hasn't fully re-rated it yet. Always beware of value traps in sectors with high debt or declining demand. Use a stock screener to filter these parameters, and you will find gems that the typical tip seekers miss. Investing is about patience and discipline. Stick to these fundamentals and you'll be well on your way to creating long